When you see more currency debasement, when you see rising government debts, when you see that more people want to move assets across borders, that's going to increase the value of something like Bitcoin.
Are you saying now that Bitcoin and crypto are long-term investments?
Don't let the headlines trick you. Bitcoin still has a lot more upside ahead. What most people are missing is what's actually behind this entire crypto surge. So let me walk you through it, starting right here. No, Bitcoin isn't pumping. Elon Musk is adding crypto to X. China and Russia are buying it. Apple is using it. What's really making crypto go up, and I'm telling you, you're going to want to watch this one all the way through because I'll get into each of these separately. So the actual cause is crypto is pumping because Morgan Stanley is adopting it. Iran is using it. Michael Saylor is buying billions. Tariffs are getting refunded. Charles Schwab is educating clients. SEC Chair Atkins is regulating it. All right, this is where we kick things off, and this one is huge. Trump administration to begin refunding $166 billion in tariffs after the Supreme Court ruled the policy unlawful.
Everybody having a good time? Yeah!
Now here's what that looks like in practice. Between now and roughly 3 months from today, over 330,000 importers across 53 million shipments may be eligible. Once this gets the green light, those companies get their money back with interest on top. That cash goes straight to the same businesses that made those payments in the first place. In my opinion, this is a positive signal for markets, and I think it's one of the main reasons everything is up today. Now, the other massive factor behind Bitcoin's price action right now is Michael Saylor coming out and saying he's buying billions more in Bitcoin again this week. And specifically, this time around, Michael Saylor announces buying $2.54 billion more Bitcoin via strategy. To put a number on it, Michael Saylor's strategy flipped BlackRock and Bitcoin holdings. Just look at this right here. This is incredibly bullish. And to really give you a sense of the scale, how much Bitcoin is Saylor actually scooping up at this point? 2.5 months worth of BTC supply purchased in a single week. Each one of these dots by itself, at this rate, strategy will reach 1 million BTC by or before August. And you have to get your head around this part because this downturn is nothing like the previous ones for Saylor and his operation. When crypto tanked before, they simply couldn't make large-scale buys. That's a whole different story now. They're acquiring massive amounts, and the engine behind it is their perpetual preferred stock called STRC. Investors get in on that for a current yield of 11.5%. That single funding mechanism has let them stack 77,000 Bitcoin already in 2026, which is roughly 10 times the total amount all spot Bitcoin ETFs have accumulated. Saylor himself has been clear about his plan. Grab every coin he can, whenever he can. But his vision goes way beyond just his own company. He believes we're going to see thousands and thousands of businesses start holding Bitcoin on their balance sheets.
There will be thousands and thousands of treasury companies, just like there's thousands of insurance companies, thousands of funds, thousands of banks. It goes without saying there's going to be a monster treasury company in every capital market. There'll be a monster in every capital market, but that doesn't mean there isn't room for 100 other very successful companies in every major capital market.
Most people are completely sleeping on this. And here's what really caught my attention. Fidelity. We're talking about one of the largest financial firms anywhere in the world is saying the exact same thing Saylor is. They went out and created a whole presentation laying out the argument that every company needs to start adding Bitcoin to their playbook.
Shareholder value. And then you compare this to Bitcoin. Average annual return last 5 years, 65%. So the question to companies out there is, number one, what's your return on invested capital? Have you calculated it? How does that compare to your cost of capital? Are you generating shareholder value? Do you have extra cash? And if so, what are you doing with that extra cash? And then the ultimate question is, what's your current opportunity set? What are the investment ideas and opportunities that are in front of you? And do you think or do you believe the return on those ideas or opportunities will exceed the opportunity cost of Bitcoin? Thank you.
Now, there's another major factor behind why crypto is climbing today and why it's expected to keep running over the next couple of years. And that comes down to what SEC Chair Paul Atkins' full statement on crypto, the entire Washington establishment is doing around crypto right now. In this clip, he reflects on his first year running the SEC, but the bigger takeaway is where he outlines his 4 main initiatives, 4 pillars focused on growing crypto and tech across America going forward. Just hear how optimistic his tone is in this.
Well, a year goes by quickly.
Yeah.
So, but we've made huge progress, I think. I promised a new day at the SEC when I came aboard, and we've pivoted from the old practice of regulation through enforcement and the opaqueness of the agency, as it, for example, with crypto, as you mentioned, that was job one, to focus on that. And so basically, we're instituting a strategy that I'm calling our ACT strategy: advance, clarify, and transform. So advance meaning modernization of our approach. So rather than fending off new innovative types of technologies, we're embracing them. And so to make them so that we'll bring them from offshore, where people fled, to come back to the United States to really work on their products. And then second, to clarify things. SEC was very opaque as to how it would approach crypto and other things. We've clarified it with the CFTC. We had an interpretative release with focusing on defining tokenized securities versus other digital assets and our commodities. And finally, to transform, to focus on making our rule book fit for purpose so that we can then make IPOs great again.
Here's another piece that's fueling this rally. Morgan Stanley just went public with their Bitcoin wallet address. Think about this. A firm managing $10 trillion has put $64 million into Bitcoin. That's about 800 coins in that one wallet. My feeling is this is just the starting point for them. They're going to grow that bag, particularly when you see BlackRock aggressively positioning itself and courting its own clients to buy Bitcoin. No way Morgan Stanley wants Michael Saylor outpacing them. And the back and forth in this interview is really something.
Jeff's at BlackRock, Jade Jacobs. Okay, first, establish your long-term view of crypto.
Well, Bitcoin in particular is this non-sovereign, global, decentralized asset that can really provide value to people's portfolios in small doses as a unique asset. Sort of like how gold doesn't behave like stocks or bonds, Bitcoin is driven by its own rules and its own drivers, predominantly, which is greater geopolitical or inflation risk. And frankly, we live in a world where these are prevalent risks around the economy, where people want to hedge that with different assets.
Isn't it interesting? It used to be fringe, and now, thanks very much in part to Larry Fink, your boss, and iShares coming out with the iBit, this is more than 2 years ago now, that it really became this opportunity for people to understand it. Are you saying now that Bitcoin and crypto are long-term investments?
I think you have to look at it through a long-term lens because it's volatile. Because we see over weeks, months, it can be up and down. People are still trying to figure out what the value of this asset is. But if you zoom out and take a long-term view of the role it can play in a portfolio, it can really be one of those diversifiers that behaves unique from stocks and bonds.
When somebody who is Bitcoin curious comes out and says to you, Jay, what is the value? 1 minute in October, it's 126,000. Today, it's 76,000.
You have to look at it in the context of a broader portfolio. We can't put a specific price target on it on a given moment. It really has to do with how much do people need this asset that can behave uniquely, that can be a geopolitical hedge. That's constantly changing around the world. When you see more currency debasement, when you see rising government debts, when you see that more people want to move assets across borders, that's going to increase the value of something like Bitcoin. And so in this world, we see that as a structural trend that's growing. But minute by minute, that demand and supply is going to change.
Let's talk in this last minute and a half about the volatility that we've.
What's happening here is just going to keep repeating. Banks, institutions, Wall Street giants, even entire countries are all moving in this direction. Bitcoin can reach $1 million once you see where all the buying pressure is actually coming from. Bitwise CIO Matt Hogan maps out the path for how Bitcoin gets to $1 million.
You mentioned a $1 million Bitcoin. Talk to me a little bit about timeline there, or what needs to happen for us to get to a $1 million Bitcoin floor.
Yeah, I mean, what we talked about in our long-term capital market assumptions is that all you need to get to $1 million Bitcoin is for the store of value market to continue to grow. the way it's been growing for the last 20 years. That market has grown at a 12% CAGR for the last 20 years. If that continues for the next 10 years and Bitcoin ends up with like 15, 17% of the market, it's at 6% today, you're talking about $1 million Bitcoin. So you don't need much to get there over a 10-year period. In terms of what could accelerate that time frame, things like what happened recently, where Bitcoin as a currency finds space in the world, could significantly accelerate that. Progress on the regulatory front, if we do get good news on the Clarity Act, that would significantly accelerate that. But I don't think that much has to happen in order for us to get to that $1 million price target within 10 years. Again, just the market continues to need to go in the direction it's been going for the last 10 years. If you extrapolate that trend, I think we'll get there.
And the crazy part is, all of this is playing out right now. We're watching it happen in real time, and yet so many people out there are still bearish. This is so incredibly bullish. $12.2 trillion. Charles Schwab shares Bitcoin, Ethereum, and crypto risk management video. They're putting this education out to clients who collectively hold $12.2 trillion. And I really liked what Bloomberg's senior ETF analyst Eric Valchunas had to say about this. His take on it is, high-level suit coining here. This is how you talk to boomers. Mapping risk allocation to port allocation is smart/prudent, limits nasty surprise potential, and helps behavior. Now, you might think this video is too basic, but this is exactly how you talk to boomers. This is the way you speak to the crowd sitting on trillions of dollars, and that is what makes this so bullish for new money flowing into crypto.
Because they're so volatile, even small amounts could translate to much larger levels of risk. Let's look at a quick hypothetical example using Bitcoin. A theoretical investor with a moderate risk appetite might split a traditional portfolio 60-40, 60% stocks and 40% bonds. Stocks consist of almost 100% of the risk in that portfolio because they're far more volatile. If that investor decides to add an even more unruly asset like Bitcoin, they might only want Bitcoin to make up 10% of the portfolio's risk. According to the Schwab Center for Financial Research, that investor might want to invest no more than 2.7% of their total portfolio in Bitcoin. An aggressive investor, say they typically put 96% of their portfolio in stocks, might be comfortable with 20% of the portfolio's risk in Bitcoin. That would translate to an allocation of just under 7%. Other cryptocurrencies like Ether are more volatile than Bitcoin, so you may want to consider investing even less. It's a bit non-traditional to think about it from a risk perspective rather than an overall portfolio percent perspective. Bitcoin's volatility means it has an outsized risk. It's an exponential relationship, so small increases in Bitcoin holdings can lead to larger increases in overall risk exposure. Cryptocurrencies can be complicated and confusing for beginners. Start by learning the basics, understanding the risks and your own risk tolerance. Remember, if buying cryptocurrencies themselves is too big of a jump at first, you could consider starting with exchange-traded products that include cryptocurrencies, although those have their own risks as well. Never invest more than you can afford to lose, whether you're looking to trade crypto actively or take it on as a long-term investment. Coming from a risk management perspective can be helpful. Patience, discipline, and consistent learning can help you introduce crypto into your portfolio.
Am I expecting this run to hold up? Looking at the next few weeks and months, my read is that it probably does. When you see those big red candles, don't panic and don't get tricked. As for what happens when we get into the fall, that's something we'll need to keep our eyes on. Anything new that comes out of this, you'll hear it from me first. Appreciate you sticking around, and I'll see you next time.